Okay, this meeting will be recorded. I welcome you all, especially for those that we've seen, those who've not met after a period of time. You are welcome. For the brevity of time and to maximize input, I would say that we start immediately. Okay, say that we start immediately. There are participants that are coming in um, who would they will just have to meet us. Okay, you just have to meet us. Oh, come in. Just mute your mic. If there's questions, I'd like you to answer. We have 45 minutes for this day one. Tomorrow, 45 minutes also. I'll try as much as possible to go straight to the point, hit the nail on the head, and boom, we are off. But for now, want to deal majorly with demand and supply. Our major focus is demand and supply. Demand and supply. What is demand? Demand is when somebody has a need for a thing, a product. Okay, in our own case, a currency. When there is a need for a currency or there is surplus need for a currency, you say you have demand. Okay, what is supply? It is when that demand is being met by the necessary, what's it called, available material or products. Okay, that's basically it. So when you have demand is on the outside, one side is a need, while supply is the other side. On the other side is meeting that particular need. It's as simple as that. Demand and supply. So how do you bring that to charts? Straight to the point. I said we don't have a lot of times today. So anybody that did not meet us or whatever you meet us, will just flow. Okay, so we'll just flow according to that. Now, the forces of demand and supply affects everything you do in life. The forces of demand and supply affect everything you do in life. I've defined demand, I've defined supply. It affects everything. It is responsible for the rise and falling of countries' economy or countries' gross domestic product or GDP. Whatever it is responsible for the rising and the falling of a country's economy. Okay, it's as simple as that. When there is high demand for a country's currency or economy, the value of that country's currency or economy will rise up. So as traders, we take advantage of it by the knowledge that we have. All right, by the knowledge that we have. Let me quickly get this off my chart so that it will not be distracting to somebody that is out there. Right. Now, demand and supply is viewed by two parties in the financial market. Let's go straight to the point. Two parties in the financial market is viewed by the retail party and then by the institutional party. Okay, institutional body. Now, the retail party knows demand and supply in a different way. There is a demand and supply that everybody knows in the retail body. RBD, drop, base, drop, rally, base, rally. Okay, we have rally, base, rally. RBR, rally, base, rally. We have rally, base, drop. We have DBD, drop, base, drop. Then drop, base, rally. All right, and then we have swap zones. These are retail, what we call demand and supply, majorly known by retail traders. These are the major ones and all that. Sometimes it is interchangeably. Sometimes the retail take position of RBD, blah, blah, blah. And then other times, this particular demand and supply that we are teaching, I'm going to show you now, expose you to it, what they use. Okay? Is what they use. Like I said, anybody that meets us The time is 8 o'clock, and as a forex trader, one of the things you must learn how to do is to be disciplined to time. If you cannot be disciplined to time, there are some trades that will leave you before you even say jack. So it starts from learning the art of trading or learning an approach to trading. You must be disciplined to time. There is no room for late coming. If you are just coming in, please mute your mic. I don't want to hear, except you are asked to say one or two things. Mute your mic. Okay. So as much as possible, let's go back. So this is the retail aspect. The RBD rally base drop base drop base rally, and then swap zones. Swap zones is a place where price shifts from a demand level into a supply level, and then a supply level into a demand level, and vice versa. This is not my focus. My focus today is to just give us simple what's it called, means of how to draw a demand and a supply scenario, and then how to apply it to any chart, so long as it has chart. Now, you will notice that on your screen, what is being shared is a line chart, is not a candlestick chart. Why am I sharing a line chart and not a candlestick chart? A line chart is what depicts the true volume of market. I repeat it again. A line chart depicts or explains or captures the true volume of market. Candlestick does not give you the true volume of market. A line chart gives or does justice to the true volume of market. I will show you that in a very clear example. Now look very closely. If you check closely, let me check. Last 2 months, okay, last 2 weeks candle is this. You will see that it produces a lot of wicks. Last 2 weeks candle produces a lot of wicks. Now, are you telling me that these wicks that produce is a true volume of market? Absolutely not. These are just voids. These are noise. These are gaps that are filled in an institutional volume. Okay, but if you check very closely, you will discover that it is an average retail trader that is more specialized or more interested in trading using the candlestick chart. A retail trader will always want to be interested. What kind of candle is this? Is this this candle? Is this a dark candle? Is it a hammer? Am I saying that they don't have a significant role to play? No, they do. They do, right? They do to an extent. But if you want to know the true volume of a market, you will switch your line chart to your candlestick chart to a line chart. That is when you will know the true volume of market. You will know where there is noise, where there are voids, where there are gaps. Now, follow me carefully. 2 weeks ago, there is a void. I have marked that place with this blue rectangle. If I switch it over to line chart on a weekly time frame, did you see that let me keep it on this is the weekly candle. I want to mark the place, the what do you call it? I want to mark the spot the weeks ended. Okay, mark the spot, the beginning of the weeks and the end of the weeks. Okay, that does it. That's the beginning of the weeks and the end of the weeks. Now I have marked it. Now I want to see if there are volumes in that place, true volumes of the market. So I will switch to line chart. Did you see that all the plenty things that you are seeing on candlestick, you are just seeing straight line movement to the downside? So very quickly, how do you use line chart? I know a lot of people don't know how to use line charts. Number one, you use it to spot clean demand and supply level. Number two, you use it to minimize the noise in the market. Number three, you use it to know where there are gaps or space to be filled in the market. I hope you are writing. Number one, you use it to spot demand and supply. Number two, you use it to know where there are gaps in the market. Number three, you use it to do what? Somebody following me. If you're following me, say I. Number 3, you use it to minimize the noise in the market. Number 4, you use it to determine or to know the exact trend of the market. I have mentioned 4 things that you use line chart to do. 4 things that I use line chart to do. Some people just feel as if this MT5 or MT4 was a design. There's no use for the line chart. I just bust your bubble right now. I gave you 4 reasons why you need the line charts, and it's very vital and important. You don't play with the line chart. The line chart is very, very important. Okay, so as much as possible, you will need it. Now, we want to take what concerns us in this aspect of how to use the line chart. Okay, what concerns us, that is, you use it to spot your demand and supply levels. I hope you would have to watch this video again to get what I'm saying. Maybe when it's uploaded by the creative arm of this whole academy, that's when you just go and watch it and see what it's we are really talking about. Because some of you will not get it at a go. You have to rewatch it. That's the honest truth. That's why I'll try as much as possible so that the video or the class session will not be a long one. It will be straight to the point, direct, and go. So we'll take number 1. Line chart is used to spot demand and supply levels. Okay, so that's number 1. Number 1 use of line charts is this, which is our major emphasis. So right now, so that's our major emphasis. So as you can see, how do you do it? How do you spot this demand and supply levels? Now, our basic English tells us that demand, let me explain demand and supply further. Our basic English tells us that when something is at the floor and moves from one level to another, it is increasing in value, right? Let's say the price of a goods. Phone then used to be 70,000, 75,000, 80,000, but right now an average phone is 150,000 naira. That means there was high demand of phone. So let's say phone started from 70,000 in this spot and increased up. So from here, from the beginning of where it started buying, is called a demand level. Correct? Somebody respond to me. Correct? From the beginning of this spot where it started buying is called a demand level. Why? From the point where there is saturation in, some people call it zones. If not level, you call it zones. Demand level or zones. So to the point where there is saturation in price. Please mute your mic. To the point where there is saturation in price, what you get is called supply zones. Okay? So, in between, who is this? All right, so good. That noise is gone. So in between a demand level and a supply level, you have that sinusoidal motion. What we, the retail traders, call structure. You will have that sinusoidal motion to the upside. Okay. Now, as a demand and supply trader, trading demand and supply alone will most likely temper with your risk management, because demand and supply traders have the tendency to have large drawdowns than an average person that uses other concepts to back it up. Hello, if you are following me, I'd like you to just drop in the group chat or in this Zoom chat and say, hi, I hear you. Now, I repeat it again. If you are trading demand and supply alone, you are trading demand and supply alone, there is high tendency that your trades or your setups will have huge drawdowns or losses. So you don't want to just be using demand and supply alone as the only sole concept of how to trade. Many people will just pride themselves with, I'm using pure price action, pure price action, pure price action, pure price action. All right, good. If you are hearing me, go ahead and say good. Thank you for the feedback. Now, people are priding themselves with, I use pure price action, strictly demand and supply. God, if it is only demand and supply, you will back to the village very early in this forex market. If you want to stay long in this market, I'm telling you a secret. You must have to apply yourself. You know your demand and supply thoroughly, and then apply yourself to other approaches that will help you reduce your level of losses or draw down in the market. I will show you. There are people that they are just waiting for a demand level, a supply level. It's not the near supply level, not the near demand level. Once it just is there, they'll start putting loss size, start buying, or start selling, as the case may be. And then before you know it, you'll be hearing margin call, broker will send them messages and all that. Amen. So as much as possible, demand and supply is very good, but as much as possible, use other scenarios or other approaches to blend in demand and supply in such a way where it will reduce your losses. Okay, you will have minimal losses and maximum result or output. This is what people do. People like Dapo Willis, people like Sammy Matt, people, all these people that you know, top guys in the industry. This is what they do. So they will just frontier the demand and supply for you to see. But the other ones that they use to reduce the level of losses in using demand and supply approach will not be shown to you. You know why everybody is falling to demand and supply? Is because the forces of demand and supply affect everything that man does on earth. It affects all the things you will do on this layer. That's why it's called forces of demand and supply. Back to our chart. Our time is fast running out, and I don't want to waste time. I want you to ask me questions so that I don't feel like I'm holding back some things, and I will be able to answer you freely and satisfactorily to an extent. Okay. Now, my responsibility here is to show you demand and supply. I am not going to show you any other thing that will help you minimize that level of loss. You will have to put in the work to bring up something that it is commensurate with your personality and the way of you want to approach the market, to blend it into becoming a profitable trader. That is your journey for you to take. My own is to expose you to this and to show you people that use it, and they have been using it over the years and all that. Okay. The good book said a man of knowledge is strong, and a man of knowledge of great strength increased knowledge. So if you want to be a strong person in the financial market, in forex trading, you must go for knowledge. Number one. If you want to be a greater person, you must go for greater knowledge. So don't stop learning. But that does not mean you should run from one strategy to another. You can have several strategies, but you should have one that no matter what is happening, come rain, come sunshine, you are on that particular strategy no matter what. There is a strategy I have now that I cannot teach you. That one I was taught, not by any mentor. That one is as a result of being in the market, staying with it, that I just realized that this thing, there is a certain reaction that I used to get, this to have on certain pairs like this, that is fluent and consistent and making me profitable. That one is by staying on it. Is by staying on a particular space, whether volatility index or forex market. See, the truth of the matter is, whatever space you are, forex or volatility index, the most important thing is that you are making money. Whatever approach you are using, the most important thing is that you are making money, you have risk management, and you are in this space, come what may. Back to business. So now, demand is your lower level, popularly known as support, while supply is your upper levels or the floor of price, popularly known as what do you call it, resistance. Okay, demand is your floor of price, lower levels known as support, while demand and supply is your resistance or ceiling of price. Okay, that explains it. I will have to make this go away because I would want us to we have 25 more minutes to go. I just pray that we're able to do one or two examples and have it come out cleanly. All right. Okay, let me, if this is going to take a lot of time. If you have questions, please be dropping your questions in the group while we are going on so that I'll be able to attend to it. Just pray that 9 o'clock we are off and focus on other things. All right. So I would, let me maintain this chart. So let's go straight to, so this is a volatility index. This is the default, what's it called? I turn it to plain and I go to the highest time frame. Now, in drawing demand and supply level, I hope you are writing. I hope you are writing. You think you will know it. You must write it. You will not know it. You will not know it. I hope you are writing. I hope somebody is truly writing and I'm not wasting my time. I hope you are writing. Now, this is it. Okay. Let me see those that are even participating here with me. Okay. Now, in drawing demand and supply, first thing you need to go to the highest time frame that has enough data for you to use. Okay. There are some brokers that just came into the financial space, and as a result of that, their data level is not much. Avoid those brokers. That's why in becoming a forex trader, I want to trade, don't just wake up and say you want to go and choose your broker because somebody is flaunting it online. Don't do that. The person that introduced you to forex, allow him give you a brokerage. It's not about referral or affiliate. He knows why he chose those people. He knows why he's there. Allow him give you a broker and stick to those brokers. It's not about fast withdrawal and all. There are a lot of things that you don't know that is happening underground as brokerage firm and all that. So let's not go into that. So ensure that you stick to the highest time frame on that brokerage platform that has the maximum data, that gives you a lot of data. As you can see, this is a monthly time frame, and this is 2017 data. From here to here is 2017. 2017 till date. This is 2025. So let's do plus and minus. This is 3. This is roughly close to 17 years. Correct? Am I correct? Mathematicians, help me. 2017 till date. How many years is that? 25 minus 17. That's 8 years. 8 years later. Okay, at least a try. So you need something minimum of 5 years data from any broker to be able to effectively use their data to plot out your demand and supply. I said 5 years, 5 solid years. Just need 5 years, and you start from the highest time frame, which is monthly time frame. When you get there, the next thing you want to do is to, number one, highest time frame. Okay, highest time frame data. In this case, ours is monthly. Okay, highest time frame data. That's number one. Number two is you want to change that your candlestick to, line charts. Okay, that's number two thing you want to do. All right, and then for identification purpose, since you're a newbie, you want to, before I go on, now the reason why there are some certain brokers that are used on TradingView is because of the issue of data, accuracy of data, not lagging in data, no gaps, artificial gaps than the gaps that the market originally creates. Do you understand? If you are selecting your currency pairs on TradingView, people prefer Owanda because they are consistent. Their data is consistent, and some other guys like FXCM and the likes of them. So That's the reason why you need the when you are selecting data, you need to know some of the people or the brokerage firm you are using for your data selection. So number three is okay. First thing, you come to the highest time frame. We're in the highest time frame now. Second thing is to change it to line chart. Now change it to line chart. In changing it to line chart, what are you looking out for? You are looking out for demand and supply scenarios for you to plot out on starting from the highest time frame. You will plot out your demand and supply scenario. Once you've done this, plot D and S scenarios. Once you've done this, plot D and S scenarios. Okay. So when you plot D and S scenarios, you will have to go down the time frame. You may decide to use three time frames, three highest time frame, like monthly, weekly, and daily time frame. All right. But just for clarity, I like my charts clean. I don't know about you, but my students, a lot of people that have come close to me have taught Forex. One of the things they know about me is that once you just bring me chart, you load indicators here and there, and the chart looks dirty, I'll just tell you that you're not serious. I'll just end it. And I'll just say, please, I have some other things to do. I'll just leave. Because it turns me off already once I see dirty charts. Okay, so on an average, I don't like any strategy that you have to put a lot of things on needs before you can get an entry. It does not do me. I don't like it. It doesn't. That's my personality for it. Some people like it. They enjoy it, but me, I don't. I like pure price action, something that is clean. I have to decide by what I'm seeing and make my decision by several other principles attached, but not until I have to use an indicator. Okay, I have indicator courses or strategy that works well, and some of the people have dumped it, some of them have turned it into robots and all that. If you want, I can dash you, but me, I don't. I don't use it personally. Okay, now plot your demand and supply scenarios. What are the demand and supply scenarios? Please go to the next. I'll go to the next chart and show you. I've plotted them out so that time can be well managed. There are four demand and supply scenarios. Now, if you check scenario number A is when price kissed each other. Okay, on a line chart, you will see that price kissed each other. All right, please look at your screen. You will see demand and supply scenario where price kissed each other in close range, very closely. Price kiss each other. It may not be on the highest time frame of data you find. It may be on your lower time frame. So this is the time frames you use to plot your demand and supply. These three time frames. Okay. These are the three time frames: weekly, monthly, weekly, and daily time frame. So first scenario is price kissing each other. See, if I were you, right, I will oh dear Lord, I will cram this thing and put it on my head. Just cram it. Don't ask questions. Just cram everything you are seeing here and put it on your head. Just cram it. Cram everything you are seeing. Don't give room for anything. First scenario is when price kiss each other. Second scenario is price is just apart, but almost on the same parallel, what's it called, surface. And then the third scenario is the overlap. Number one is kiss. Number two is apart. Number three, the overlap. And then number four is the kissed and are apart. Okay? I don't want to write it so that it will not. Number one is kissed, the kiss. Number one kissed. That's A. Number two is they are apart. Number three is they overlap. And the overlap. Let me leave it at overlap so that to not overlap and close. Overlap and close. All right, who is Solomon Adesina? That's number Number 3 scenario, they overlap and close. And then number 4 is the kissed and apart. Are you seeing that? We'll find all these things on line charts very soon. The kissed and the apart. One is kissed. Woo! We have 15 minutes more to go. One is kissed. Number 2 is the apart. Number 3, the overlap and are close. And then number 3 is the kissed and apart. Before our time goes, let's spot these 4 scenarios on chart, starting with the highest time frame. And because now in spotting these scenarios, you can find one particular scenarios consistently on one time frame. No challenge. Don't be in a hurry. Just spot the best you can find. Okay, using your line chart. Using your line chart and your rectangle horizontal tool. Okay, we'll do that. You see me use the process and I will get that done. Use your line charts and spots. Then ensure that from the current position where price is, just spot 3 above price per time frame, 3 above price and 3 below price per time frame. So on Monday time frame we'll spot 6, on weekly time frame we'll spot 3 and 6 rather. On daily time frame we can spot and 6 also. For the sake of my work to be clean, I like my work being clean. We'll just spot the ones that we can spot and then we'll go. And then when you're spotting, don't look too far from where price is. To your left hand side, don't look too far. Just look a little bit away from price. So let's start. I start by spotting here. All right, look closely. In spotting, see here, we saw scenario number 4. If I'm correct, say I see. Type I see in the group chat. We have 8 minutes. If I'm correct, say I see it also. Say I see it. Scenario number 4. I think you must have jotted down the approach already. Scenario number 4. Say I see. Next is we have, let me check. I just need 3 above price and 3 below price. Okay. Okay, it seems like we're having scenario number 4 today. Plenty. See another one here. Are we seeing that? If you have something else that I am not seeing, please call my attention. Or you are seeing something that all right. Okay, so serial number 4 seems to be many. This is kissed and apart. Kissed and apart. Kissed and apart. That's scenario number 4. Scenario number 4 seems to be many. Okay. I think we have 3 already, but since we don't have 3 below on monthly time frame, let's do one more above price. Let's do one more above price. You can see here and here, correct? Or you can decide to make this particular guy, you can decide to make it overlap and apart. All right, that's this particular spot and this particular spot here. You are still correct. All right, you are still correct. So we have 4 levels already spotted as demand and supply level on monthly time frame. Next, go to your weekly time frame. Now, in your weekly time frame, you can decide to, I will clear those drawings for the month. You can decide to change the color of your rectangular tool. Okay, and then you will lock this guy so that it will not be moving. Disable selection. Right click on it, disable selection so that it will not move. Right click, disable selection. Click OK. Right click, disable selection, click OK. This is one of the sound way of trading. But like I said, it has its own downside, and I've told you how to manage the downside. Now, this is weekly time frame. I want to change my line colors to, what color do I change? Blue, most popular. Common color is blue, right? Dark blue. Or change it to Gold, something that is a little bit bold. Right? So now I need just 3 levels above price and 3 levels below price. It may be immediately above price or 3 levels below price. So let's start looking. Let's look out for, do we have any here? Okay, I've seen one here, seen one here, seen another here. Okay, that's one. These are both price. All right, that's above price. Okay. Let's see. See another one here. Okay. I will show you. This is it. This guy, and this guy. All right. You can also merge this if you want to, but they are all on the same level. So to just do justice to that guy, I think let's move it a bit up so that those levels are all captured. That's 3 levels gotten. Oh, sorry, 2 levels gotten. Good. See another level here. See here. See here. See here. So that's 3 levels gotten. We can continue since we don't have 3 below price. So we can still continue. So automatically, if there are enough levels above price, it's telling you that price is bullish or is highly demanded for. If there are plenty levels below price, it's telling you that price is bearish. It's highly, there is supply, there is enough supply in the market. That's what it means. Okay, that's why you see most of these levels is above price. It's telling you that price has been bullish over time and now price is bearish. Okay, or price has been highly demanded for. Now price is coming bearish. Anything that for every one of the principles about demand and supply you need to know is that for every rise in any product, there must be the selling side. There must be the sell. Market does not like gaps. The market hates gaps. So for every buy, there's always be a sell side to fill up those gaps or orders that have not been taken. All right. So in this case, that's what demand and supply does. Every time you see a buy, be looking out for the sell because the sell is going to be massive as equal as the buy. Else the market will crash. All right. So what do we have here? We have 2 minutes to go. Let's see if we can just draw it and then come back briefly and finish up. Do we have any other level? You don't have to go too far from where price is. So I'm trying to avoid going too far. Okay. So spotting it alone is it's called eyeballing, and in eyeballing, nobody teaches you. You do it yourself. You learn on the job. You learn on the job. You keep practicing until you get better. Practice until you get better. Okay, let me add one more. We have how many levels now? So let me spot this. Let me spot this. So if you check closely, you will see here, and yeah. So that does it. What you do for yourself is you lock these guys so that they don't move. Okay. You lock it so they don't move. Originally, if I'm trading this approach, I will just use one particular line chart. But because it's a class, it's example, and examples communicate principles. That's the reason why I have to use different line coloration. Okay, if it's just so the next is you go to your demand, your daily time frame. You go to your daily time frame, and as usual, you plot 3 levels above price and 3 levels below price. Now, this will end and I would share a link for you to join, and let's continue the class. But for now, let's give it 1 or 2 more minutes before I'll share the link again in the group. Okay, so let's be taking this. Let me change this color now. So as we were, let's get this meeting going. Okay, just pray the others will be able to catch up. All right, just pray the others will be able to catch up with us. So next thing, all right, I said this should be locked. Disable selection. Disable selection. So we're in daily time frame now. What do we say? We get 3 levels. Oh, sorry. Control B. So we're in daily time frame. I want to get 3 more levels above price and 3 levels below price. So let's change the color. And I said, let's use blue. The blues. So let's use blue. Let's use blue. So we are taking blue on our daily time frame. So when we do this, let's start looking for our levels, our scenarios, our 4 scenarios. Let's start looking out for it. Zoom out closely to see if there's any. So as you can see on the daily time frame, the lower the time frame you go, the more the levels or the scenarios you begin to see. So these are daily time frame. And since price, there's nothing below price here that we can see. See, nothing is below price here. That's the price is just going down. So we'll just make do with what we have. We'll go above price to select our 3 levels for our daily time frame. All right. So number 1, this is it. Yeah. If I'm correct, somebody should tell me I'm correct, please. Or if you are seeing it like me, say I see. So which one do I get? Where do I get? I get another one above price. That's on a daily time frame. If you are seeing something I'm not seeing, please call my attention. Okay. Why are we going too far now? This seems supposed to be around. This bad. This level here is overlap and apart, right? This level there. Don't think it's bad. It's not bad. Where else? You must not force it. If it's not there, or if you can't see it, then that seed is not there. We must not force it. So let's look a little bit backwards. Okay, we have one there. See here. Right? So where else? We have one above. Good. I think that this is beautiful enough. You see here and here. So I think we have 4 above price is enough so that it will not now the chart will not start looking like a rainbow color. Okay, it's that some people's eye will not start feeling or getting dizzy. All right, so that's it. We have our levels already. Once you have your level, next thing you want to do is you want to you pick a color in your rectangular tool Remember we have not marked ah so let's quickly mark this so that they will not, let's disable selection on this so that it will move. That's what I wanted to say. Let's disable selection on this so that they will not move. If you don't have a laptop, it will be difficult for you to say you want to try this approach because you will not get the comprehensive data that you need. So I encourage you to get a laptop or a device that has a wider screen for you to capture a lot of data. So once you have deselected that, so that this will not move, you would have to change, you have to pick a color, a rectangular tool that is suitable. You must not go higher time frame now since your lines are already, your horizontal line is already in different colors. So this is this guy. I would just want to maintain this color, or I guess something, any color is fine. So how do you copy this so that you don't have to be picking here and there? Control, then left click and then drag. See, that's what I just did now. So control, left click and drag. Control, left click and drag. You will move that rectangular slim, you move that rectangular tool, you move it to the lines you draw already. Those lines you drew, you will move them. The same principle, control, left click, put your hands on control, then left click, and then you drag. It automatically copy. Do them like that on all of the pair. If you check closely, all the lines have been covered for, and you make it slim, because the reason why I'm making slim is because when you go lower time frames, your entries are not in this time frame. So when you go to lower time frames, you may have the tendency that these little levels you are seeing like this are wide spaces. So as most people want to take trades on supply levels for sell and on demand levels for buy, because price reacts to those levels. Those are the major turning points in prices. So price reacts in dollars. So people do tend to take trades on that place. That's why you need to make your rectangular tool slim. For some people, they don't want to even use rectangular tools. Just go ahead and just use only the line tool, the horizontal line, and that's it for them. They are okay. It's still fine. Whatever approach is comfortable with you is fine. Just increase. Maybe if you don't want to use the rectangular tool on your line, on your horizontal line, after you have marked your scenarios, just increase the font size of your horizontal tool to, let's say, let me do that quickly. Something bigger that, see this. Okay, disable selection. Oh, all right. Okay, this is rectangular. This is your horizontal tool. Come here, right click on it. All right, see this, change it to size 3. See, if you check, you see the guy, see how the size is bigger. So you may not even need to even use any what do you call it, rectangular tool again. That's for some people, right? That's for some people. Others want to still use that rectangular tool on their what do you call, on their charts. All right, so after you have marked out those levels and left click and dragged somebody's you have left click and drag. Next thing to do is to just change it to your candlestick. Bam. You change it to your candlestick. Of course, you're not going to take your trades on higher time frame. You're not going to take your trade on monthly time frame, your weekly time frame, or your daily time frame. So you will go to the time frames where you will take your trade comfortably. For an average demand and supply trader, But what I want you to take note of is that I want you to see how price responded to those levels you drew. I want to see how price responded to those levels. And I know you must have seen a lot of traders charts, gurus, mentors out there. You have seen all these levels on the chart, right? And you are wondering, what is all this thing? What is all this line adding to the line again? Well, voila, here you are. This is all what it is. I have just demystified all those things we have been seeing. I don't know how to come about it. This is it. All right. So if I've done justice to this, I'd like you to say thank you, sir, in the charts that I know I'm doing a good job. All right. In less than 1 hour, I've been able to demystify the whole demand and supply for you. And it's very simple. So this is what we represent. We represent principle, simplicity, and profitability. So if you check closely, you will see that price tend to react in those levels. Now, the higher the levels, right? The higher the levels. Thank you so much. Thank you so much. I'm seeing some replies already. Thank you so much. Yeah. Thank you so much. Others, I think others are still booting. I'm still expecting your response. Now, the higher the time frame, the stronger the levels. Monthly time frame levels, if price gets to that point, it drops or it rises as quickly as possible. So an average demand and supply trader is marking mostly only monthly levels as much as he can get, so that he will have to go to lower time frame and take trades at those levels when price gets there. Are you seeing that? Are you seeing that? So let's say, what's the color for our monthly level? If you know the color for our monthly level that we use on the horizontal to, please respond in the chat. What's the color for our monthly level? What's the color for our monthly level, please? What's the color for our monthly level? The color we use to mark out our monthly levels or scenarios or zones. Beautiful. Any other person with contrary opinion? Black. So we use black. So I like you to mark, to take a look at where we have black, what do you call it? How price responds to that level quickly when price got to that point. So we started from here. This is our demand. This is our daily level. Price came. This is black. Just see, once price touched that level, it moved quickly. And then it dropped to a daily level. When it came back to that point, it now dropped again, or it came close to dropping like this. It now dropped, went to a daily level. Okay, went to a weekly, then came back to a daily level, and then went down. You can see that there is a consistency at which the drop-ins occur. It occurred in respect to the higher time frame has a higher force or a higher pull or push force. So if it reaches a higher time frame level, price tends to leave that place immediately as if they are quarreling. That's what is happening. So the higher the time frame, the stronger that level. And when price leaves there or gets to that point, there's always a reaction that is quick. So demand and supply traders tend to take advantage of price in the levels of higher time frames. So some people will just stick to only monthly and weekly time frame. They are still right. The important thing is that you get your level correctly and attach other parameters or trading approach to this demand and supply in such a way where it will minimize your losses. Let's take, for example, I came here. Let's take, for example, you must have seen people come to chat like this, and you must have seen them say they're taking a sell. Let's say I took a sell here because it got to a weekly level, right? And I'm targeting this level. Okay. Change this to a popular blue, right? And I'm a demand and supply trader. I'm targeting this level. I see price come up and I want to sell it Once I sell it, I want to put my stop loss above here. You hear them say, I want to do 1:3, blah, 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 all the risk to reward ratio that they have. So uh, you have this, right, as your stop loss. Are you correct as to the direction of the market? Absolutely, you're correct. But something, some, sorry guys, my network just tripped up. So we are back. Okay, we are back. My network just tripped off and all that. So, okay, are you correct as to the direction of the market? Yes, you are correct as to the direction of the market. But what I was saying earlier on, that demand and supply has its own lapses. So imagine the drawdown you have to take, and price eventually took you out. You took a sell here. Maybe you saw this. You say, it's already on a weekly level, so I'm going to sell. You took a sell. Price came, took you out, and almost went to levels above your level, and then came in back into your entry levels, into that as if it wants to go back up, came in, did this, and dropped. When it dropped and came back almost to your level again, and it did not return back again. So you must know something aside demand and supply to be able to help you be not to be caught up in the web of these losses. Were you right that price was going to sell? Yes, sir, you are right. But did price sell at the time you said it was going to sell? No, sir. Did it take you out? Yes, sir. Did you end up in profit? No, sir. So you see, this is why most people are knowledgeable in a particular trading aspect, but a lot of things are missing. They are knowledgeable in this thing, this forex market, but they are not profitable because some ingredients that makes the profitability index go higher or increases the profitability potential of that approach is not there. It's not. So as you can see right now, what will make you to be a profitable demand and supply trader is not in just knowing the approach itself. You must know something else attached to the approach. All right, guys, this is where we draw the curtain. If you have questions, I would like to unmute everybody and have you give me one or two questions. Please take it easy on the question. If I know if you answer, I go give, sorry, permit me for those that are in the diaspora. This is why we roll in Nigeria, man. If I know if you answer, I'll give rooms to others that can be able to help. All right. There's nobody that has a monotony of the knowledge of this market. So let's have your question. I would like to unmute everybody now while we have your question. All right. Questions, question, 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 question. Type it in the group chat, whatever you want to do. Just type your question, however you want to reach me. You can ask your question live here, or you type in the group chat. Let me read it out and attend to it. Questions, please. Let me have questions. Questions, please. Everybody, questions, questions. I'm waiting for a question. Okay, I think I've done justice to this approach. Done justice to this approach. And I'm glad that you were in the class. You're able to join. There are some people that were not able to join and all that. So I'm glad that you are here. You're able to follow through. In the absence of no questions, I would like to call this a day. I'd like to call this a day. Maybe we'll see some other time. If you have questions in the course of the week, or while you are practicing, or you're watching this video on the Crown Traders YouTube handle, you would throw out your questions and then we'll attend to it subsequently tomorrow. I don't know. Tomorrow will be more examples on volatility index and also on currency pairs. Okay, just to give you the variety in how the forces of demand and supply works on any ground, so long as it is currency or it's in the financial space. All right, guys, I think I was able to do, yes, I was able to do this earlier on before the class. Oh, Mr. Adine, you're welcome, sir. Mr. Adeleyini Joshua, you're welcome. God bless you, sir. All right. Thank you so much. If you have no questions, guys, God bless you. God bless you. God bless you. So I was able to do this. I use only line chart. If you check, you see there's disparity. Some is weekly, monthly, but they are all line charts. I did this intentionally so that I'll just have oneness and I will not use what do you call it? The rectangular tool. So that when I get to this place, I'll just see lines. So sometimes you will see people have these lines only on charts. You'll be thinking it's psychological level or something. And sometimes it's not, that's not what it is. It is demand and supply levels. Okay? It's demand and supply levels. And you will now see some people adding trend lines to it. Some will tell you, this is not the best way to use trend line, this is the best way to use trend line. Everybody knows what works for him. The most important thing is that you're profitable. Okay, everybody knows what works. And somebody will say this is not the best trade to use trend line. Another person has been using trend line for the past 10 years, have not changed, right? And he has been profitable with that trend line he has been using. He has added other things to it, but trend line is the major and what's it called shooter of that particular strategy. Everybody has what works for him. So you've known demand and supply approach now. Now it is left for you to go and fine tune it, add other approaches to it that will enable you reduce your level, increase your level of losses, increase your profitability index of using demand and supply approach. If somebody asks you what are you using, tell them I'm using demand and supply approach. Okay. Now, if he wants you to explain further, he would have negotiate paying him paying you or whatever. This is MT5. This is not trading view. This is MT5. This is MT5. It's not trading view. This is MT5. Okay, this is not trading view. This is MT5. So you have to negotiate him paying you or so, right? Yes. This is MT5, Mr. Joshua. It's MT5. So meanwhile, this is it. You can see I just used trend line and added to demand and supply. It's giving you a whole new picture, a whole new direction. Anything. Some people can just add chart patterns. Some people can add candlestick patterns, rejection candles, and all that. Let me quickly share TradingView interface. I think I had it drawn out on TradingView before we came here also. I hope it doesn't clear off. Uh, that's cleared off. I shouldn't have refreshed the page. Okay, okay. Okay. All right. Doesn't clear up. All right, so I had the same, I have the same plotted out here on demand and supply and all that. Let me share you an actual chart where I worked on the demand and supply level. Just give me a moment. Give me a moment. Um, okay, I think here we have it. Good. Good. Right. Okay. Okay, so this is trading view currency pair. I did the same whole mapping and all that, and then you have this mapped out. All right. Let me go to daily time frame. Oh. Oh, okay. Sorry. 4 hours. Let me go to 4 hours. So this is 4 hours. Um, ah, okay. Pardon me. I don't know. Trading view is misbehaving. So, okay. So this is a monthly time frame. This is monthly time frame. You can see the horizontal lines drawn in that. So this is the weekly time frame. You must have seen some persons drawing this on weekly time frames. Know that. And then this is daily time frame. So this is the daily time frame. You would see that price reacted to all those zones. So down to the 1 hour or 2 hours time frame, you can see 2 hours time frame. Uh, you can see a successful reaction of price on those levels. Clean. But like I said, you must also add something else to increase your profitability and reduce your losses, because you may be wrong as the direction of the market. You may be right at the direction of the market using demand and supply, but in entry, using your entry approach needs to be sharper than just using demand and supply levels. All right, guys, I think I've done justice to this, and we just have to call it a day. Thank you, everyone, for joining us. This is the Crown Traders. We hope to meet tomorrow and consider more examples. That session will be an interactive session where you have more examples. But before now and tomorrow, just take our time and do practice those levels that we considered. Look into those levels. Let me go to those levels again. Practice them. Okay, practice those levels, these scenarios. Take out time, locate these scenarios, and send the charts on the group chat. Get a laptop. If you want to use a phone, I don't know. It may look somehow, but it will not capture the necessary documents or details that you need. So get a phone, a laptop, a device, a PC device. Send your work before tomorrow class so that it can be corrected. You see, in this phase, you must practice. You must apply what you are taught. Nobody will practice for you. That's why we have good traders and lazy traders that will not just put in the work. All right. So if you want to be both average, jumping from one group to another, strategy to another, this is an opportunity for you to do that. Practice this, put it into practice, see the lapses, see what you need to do. Trust yourselves, trust the process, and trust God, or whatever you need to trust to ensure that you add to it to reduce your level of loss or profitability. God bless us, guys. Hope to see you tomorrow. Cheers.